In early December, Family Wealth Group invited clients and other guests to a special luncheon at Lexington's Signature Club, which was decorated for the Christmas season. It was a chance to renew old friendships and make new ones. Everyone enjoyed a delicious hot buffet meal, but the highlight of this event was a presentation by Mike Sorrentino. Mike Sorrentino knows a thing or two about investing, especially when it comes to retirement. As chief strategist for Global Financial Private Capital, Sorrentino helps determine the target allocations to various investment vehicles and sectors. He says the days of investing in mutual funds are over.
First and foremost is the number of hidden expenses in these funds. Okay, so what happens when you buy a mutual fund? Okay, within 3 to 7 business days, they send you a prospectus in the mail, right? It's about this thick, it could stop a bullet. Okay, I've been in this business a long time. I can't make it past page 10 of one of these things. They're unreadable. They really are. The problem is if you really force yourself to get through one of those, you start realizing the expenses, the stated expense ratio that they have in the fund is almost always not exactly what you're paying. There are a lot of hidden fees and a lot of hidden expenses within these products.
Global Financial Private Capital is an institutional money manager that manages money for pension funds.
Imagine me going to a pension fund manager, somebody with, let's say, $400 or $40 billion in assets they need to manage. I say, hey, pension fund, I got a great product for you. Okay, you're not gonna meet with anybody in the investment team ever. It's going to be completely opaque. You won't have a clue what's going on inside of it. Okay, look, I mean, think about it. With a typical mutual fund, do you really know what's going on inside of it on a day-to-day basis? No, you don't. It's very, very opaque. I got this great product that you're not going to know what's going on inside of it. There are going to be screwy tax issues. Oh, and by the way, we're going to be using some of the money in the fund to spend on our sales and marketing expenses so we can go to the Super Bowl.
Sorrentino says his company's investment strategy is not a good fit for everyone.
If you want to knock the ball out of the park, that's just not what we do, okay? So who are we and who are we not? We are as highly contrarian, okay? If everybody is looking to the right, we're going to look to the left. Can't understand why nobody's looking to the left? All right, let's go check it out. If everybody's selling, we're going to be buying. What we are not is we are not market timers, okay? What I mean by market timing is going into the market and trying to get it. All right, good example. If you ask me where I think the market's going to go this week or next week, here's my answer. I have no idea. I have no clue. The short-term stuff's impossible to predict on a regular basis.
Diversification is very important when it comes to investing.
I stole this chart from a business school professor many years ago. What this is saying here on this horizontal axis here is the number of securities in a portfolio going from 1 to 900. And on the vertical here, it's showing the portfolio variance. Okay, that's a very fancy word for how much volatility, or we can call it risk for all intents and purposes right now. So the point is that once you get to about 20 to 50 securities, you more or less have diversified out a lot of risk in your portfolio.
In the short term, markets are highly emotional.
They go down and up for absolutely no reason. Fear and greed are very, very powerful forces. I'll give you an example. Yesterday, the market was down over concern that Black Friday wasn't as strong as last year. Are you kidding me? One day of sales, really? People are selling Best Buy and all these companies for one day? That's absurd.
Sorrentino explained how he takes advantage of panic selling when markets make people nervous.
We love to see these types of panic in the market. And I'll give you another example here. This is this is a chart of the S&P 500, which is a proxy that we use for big companies, big stocks here in the U.S. for the financial crisis almost to present day. And as you can see, I circled a couple of these dips along the way. And guess what? They were all great buying opportunities. Markets are incredibly emotional.
He also used this analogy to explain why retirement investing used to be simpler, like working on old cars.
But nowadays, think about the cars this day and age, like this one over here, man. I mean, you need a computer and engineering degree to change the air in the tires. I mean, it's insane how complex these systems are, right? Now, it's not like it's better or worse, but you need a different type of skill set this day and age to fix a car than you did many years ago. It's the same thing with financial markets. Okay, we're finding a lot of income out there, but it does require a very, very specialized skill set to find it.
And finally, Sorrentino gave his advice for investing in gold.
My thesis on gold is very simple. If you want to own gold, go to Tiffany. Buy a watch, earrings, whatever it may be, because we own the stock, everybody wins. and your loved one will love you for it even more. I'm kind of half joking, but not really. If you want to own gold in your portfolio as a hedge against inflation, that's fine, okay? Because I do believe in diversification. Even though I'm not a huge fan of gold, I see nothing wrong with that. Excuse me. Where I do take issue with owning gold is if you think the world's going to end.
You too can benefit from informative events like this once you become a Family Wealth Group client. Please call us at 859-309-0349 to make a reservation to one of our free introductory seminars or set up a complimentary consultation appointment.